universally, what people are saying is we are capacity constrained.
Yep.
If we had more GPUs, we could grow faster.
I've seen loads of reports this week on energy, on memory, on GPU, on planning. There's been a number of undertones around that topic.
The bull case here is space compute. We talked about constraints on Earth, and Musk keeps coming back to, look, there's just not enough power. And so space is the only place we can get the power we need fast enough to tool up on delivering the AI people want.
But my assumption is also, it's not just about power, it's about freedom. They don't have planning constraints, build constraints, people constraints, regulatory constraints. This is just like, we can do what we want in space. Is that fair?
SpaceX going public is super exciting. Another company that must go public is Anthropic. It's the most exciting company in the most exciting space. And it should be a public company. And people should be able to buy into that business and should have transparency into what's happening. What we've also seen is that there is so much appetite to throw capital at them. They're talking about a $50 billion round at kind of OpenAI prices.
Soon there'll be Anthropic prices. They'll be the market setter.
Well, there you go.
Hello and welcome to Upside, where every week we look behind the headlines to give you the real news affecting European venture. Today it is Mads and myself, and what have we got on our agenda? We've got big tech earnings, reports are out. Lots of politicking this week, especially at the Frontier Labs. More AI model drops, what's hot? Will the EU and the UK AI Acts converge? Energy, should the UK get small modular reactors online? Plus predictions and deals of the week. My dear.
This show is not investment advice, and the hosts of this episode may be invested in the funds and companies featured.
Now, quite an interesting news week. But first up, how have you been? How's the energy in the room? Are you good? Are you bad? Are you upside down? Where are you?
Fabulous. Come on, the sun has been out. It's great. It's a beautiful week.
It is nice once the sun hits London. It's a different place.
Indeed.
We don't normally do this, but I thought I was quite intrigued by the news cycle this week. Most of this we are not going to dig into. Watching King Charles tell jokes at the dinners and at the White House, I thought was quite nice. I wonder how much goodwill he's bought. I saw the whiskey tariff has been dropped, so that was we got one thing, I guess, and for whatever that's worth. Shootings at the correspondents' dinner. Obviously, the Hormuz crisis is still with us. I think Brent at time of press was hitting $126. The UAE has left OPEC. Rates to be held, I think, pretty much universally. I don't know if you saw this, that Canada has launched a sovereign wealth fund. Did you see that?
Yep.
And I also saw from the court transcripts with the Musk Altman shenanigans. I thought it was quite interesting that Tesla is not currently pursuing AGI. I don't know if you saw that as well. Anything else caught your mind this week?
I think he's been flip-flopping a bit on that, Musk. I think he said something different just a few weeks ago on X. He said Tesla will be one of the companies to make AGI. Yeah, and then something different under oath. But okay, that's fine. You can have a difference of the horizon here.
Slightly Trumpian, kind of say whatever he needs to say at the moment in time to court a reaction, maybe.
I think just talking about Trump, I think the Charles visit was brilliant. I think it was so well choreographed. And I don't know if you noticed that
the little mini digs.
Navy. He had those too, but he had the Navy troll through the naval registry, and they found a ship called HMS Trump.
Yeah,
and they found the bell from that ship, and they gave it to him.
He must love that.
Yeah, come on.
Must love that.
I mean, I think it's so clever, and clearly it's
just grooming and loving, like Tim Cook he took a golden disc or something, golden iPod, I forgot what it was. Yep. Lovely. Well, let's dig in. First up, we've got on the docket is markets, Mad. So this is kind of your happy place. So big tech earnings week this week. Microsoft, Alphabet, Meta, Amazon, all published figures. I think at time of press, we're recording on the Friday. I think Apple is releasing today, I think, or last night. I can't remember.
Last night.
Oh, okay. So tell us what's cooking with markets, and how does this pair back to Europe, and what do we need to keep an eye out for?
Well, the five big beasts have all reported. So as you said, Microsoft, Alphabet, Meta, Amazon, and Apple. And you sort of had two up, two down, and then Apple is actually looking like it's trading up here in after hours. And what we can see is that the cloud market, powered by AI inference, is absolutely on fire. Massive revenue growth. You had the Microsoft up 18% year on year, Alphabet up 22% year on year, with the cloud parts of those businesses just growing phenomenally. Alphabet, or Google, if you will, cloud business was up 63% year on year.
Wow.
Yeah, it's just absolutely firing. And what's happening at the same time is CapEx is also going up, right? We've been talking about that over the last quarter, is that even though it was already at a high level, they keep raising the bar. And universally, what people are saying is we're capacity constrained.
Yep.
If we had more GPUs, we could grow faster.
I've seen loads of reports this week on energy, on memory, on GPU, on planning. There's been a number of undertones around that topic.
So I'd say from sort of some of the bubble talk we had throughout 2025, I think a lot of the naysayers are kind of coming around to the fact that there is a lot more to this than just a flash in a pan. Meta have also raised their CapEx budgets, but obviously don't have a cloud business, and so they're getting punished for it stock wise. The share is down more than 8%, whereas Alphabet, that are growing very fast, they're up nearly 10% to an all-time high. Alphabet is just the darling right now. They can do no wrong. I mean, if you look at the bets they have made, okay, so they have DeepMind, they're making the Gemini model. And, we know that Gemini, they're selling a lot of it, but it is not sort of seen as the most popular model in the market right now. Well, guess what? They've got nearly 15% share in Anthropic, which obviously is. They also
Nice little
happen to
hedge.
be a major shareholder in SpaceX that's about to go public. So, I mean, it's just, if you want to buy just one stock to sort of be in everything right now, it seems like Alphabet is the bet. Obviously, no investment advice, and all you do your own research and all that stuff.
Yeah, all that good stuff. Memory. What's happening on the memory side?
So memory is interesting because the shift, we've seen a shift from power being the main constraint to actually memory seeming to be the constraint.
And still, okay.
Yeah, you've got a triopoly. You've got SK Hynix, you've got Samsung, you've got Micron, and they were up last year, but they are up massively over the last 2 years, and they're really the kind of at the end of the series of choke points that you have around the semiconductor manufacturing equipment, kind of the packaging expertise that you have at TSMC, and then actually the ability to make the memory. And some of the discussions that have been is around, Chinese AI chips, can they make their own inference? It seems today that it's not even if they make their own chips, they have such a massive constraint on memory, and it takes so long to stand up these memory fabrication facilities that becomes a chokehold in itself. Interestingly, just going back to earnings, Apple, they had a really, really good quarter. There's been lots of talk about, Apple obviously not being in the CapEx game, not being in the AI game like others.
I'm sure everyone's seen the little memes and the little graphs, yeah.
Well, Tim Cook came out and said, look, we are in the AI game. It's going to be personal. It's going to be private. It's going to be fast. It's going to be
I'm so
on-device.
excited by this, as you well know. I think they are going to come out strong. I do. And is it John Turman who's the new CEO? He's the product guy. I just hope he pulls. It'd be great if his first time on stage is pulling something that actually bloody works. So I'm bullish on them.
Well, that would be fabulous. But I'd say even without that, Cookie has certainly had a strong quarter here to report. iPhone sales up 22%. Greater China, which was seen potentially as a weak point, up 28%. They're talking about India as a massive market. So people are positive around Apple and the stock's going up. Now, why are we talking about all this? Well, back to memory. Because even for Apple, they're talking about memory being an increasing cost component. So if you look at the bill of materials of the hardware they make, especially on the computer side, well, memory is becoming an issue there for them. So not something that's holding them back, but it's just memory is pervasively the choke point of the global AI industry.
Well, Tim Cook he is the supply chain guy. I'm nearly finished Apple in China, which is a great book if people haven't read that book. And I didn't realize how instrumental and how how much he worked on the whole supply chain piece globally, and it's a fascinating read. Do give it a go.
But it's interesting to juxtapose this with what's happening in the wider economy, because your stock markets have been doing quite well, and it may be a bit counterintuitive. I mean, we're talking about the Straits of Hormuz, and we're talking about conflict in the Middle East and rising inflation and issues around oil, and still stock markets have been doing well. And it's really because AI is powering these companies to perform so extremely well that is not just holding up the market, but actually pushing the market. They're true bellwethers.
But what people want to know, though, is, I mean, I guess when will Wall Street meet Main Street? I think that's the challenge that most people have, because you can't have this forever growing market state when the real world hasn't quite caught up and inflation is gonna bite backsides. Because all the reading that I've been doing about how the Hormuz is actually going to affect us, it's not going to come this year. It's going to come next year. It's when energy prices will go up, fertilizer and everything will start to impact the real world. And I don't know how that's going to marry. I don't know if you've got any thoughts on that.
I think it'll happen before then. I think you're going to start to see inflation trickle into inflation sooner if there isn't a resolution. And obviously, that if we want mainstream to do well, the general economy has to do well. And that is back to all the things we know. You've got to have well-functioning capital markets. You've got to have well-functioning commodities markets. You've got to have access to energy. We can have well-functioning labor markets. I mean, kind of all the hard work. Even the magic of AI can't wish away all these other things. But it's interesting that, in a situation where one would have thought, look, it could be a bit dour and markets could be down. Actually, they are in many ways up.
Yeah. Well, let's stay in that world. I want to talk about frontier labs and politicking. We've had a bunch this week. I've seen a number of news stories about some shenanigans. So we've got Musk versus Altman, as I'm sure everyone has seen. My favorite quote so far is from OpenAI's lawyer, William Savitt. His opening statement was, "We are here because Mr. Musk didn't get his way at OpenAI, so he quit, saying that they would fail for sure. But my clients had the nerve to go on and succeed without him," which I'm sure was nice and baity for Musk sitting in the seat. We've got China who's blocked the sale of Manus to Facebook. Now, I don't, you might know this, Maz, but I can't quite work out how the Chinese state has got such tendrils into a Singaporean company. It also felt a little bit tit for tat-ish. So the Americans accusing Chinese labs of industrial scale distillation, i.e. how can DeepSeek do so well so quickly without Anthropic? So therefore they blocked the sale of Manus. I don't know if there's any truth in that. It felt a little bit tit for tatty. So you got Google investing under 40 billion in Anthropic, as you've already mentioned. That's another interesting chapter in the circular financing compendium. And then quietly behind the scenes, Europe has been absolutely killing it. Ineffable, recursive superintelligence, some big deals, some big stuff. Is there a gap with all of this stuff going on and people falling out, for Europe to slot in? I don't know. But where would you start on the politicking piece?
As you say, it's been a super interesting news week. I mean, let's just pick up on the whole Manus piece, because you're right. People might recall Manus was one of the first agentic AI companies coming out last year, and it was a Chinese company, and they made a beautiful front end, agentic front end, and people said, "Oh, great, is that Chinese AI?" But it was all Anthropic under the hood, right? I mean, it was because they'd really thought about how can we make this not just something cheap and cheerful, but actually use the best components all the way up the stack to build a delightful user experience. It truly looked like something that had come out of Silicon Valley. Now, the founders quickly made a decision to say, "Look, we are going to relocate or re-domicile from China to Singapore, gives us more
Which is
optionality."
common, right? That's quite a standard path for some large Chinese organizations, I hear.
Yeah, I don't think we've seen it that much in sort of the startup scene yet.
Right. Okay.
And there's certainly, this is part of what's leading to some of the issues you raise. What then happened was, he had Benchmark invest into Manus, which is a kind of really U.S. Leading venture capital firm, putting money back into effectively the Chinese startup ecosystem was something that people have been pulling back from a while. But it was felt, look, it's a Singaporean company now, we can put money in. And then there was a sale to Meta of that business. Now, as you ask, how can China assert that kind of legal supremacy or legal sovereignty over an entity that's now Singaporean? Well, I think a couple of things. Basically, what the Chinese are saying is that the IP was relocated and transferred to Singapore without approval, and
Right.
is subject to export controls. And there's a travel ban, there's an exit ban on the Chinese national founders. And so when you block the transfer of the IP and you block the movement of the people, it is hard to sell an AI company. So, yeah, that is
Wouldn't
the
that have
answer.
come up in DD? Wouldn't that have come up in wouldn't that be a possible outcome if you're a large US venture firm looking at a deal like this?
Well, the question is how much is retroactive. I think
Yeah.
you talk about whether this is tit for tat around distillation. I actually think that the parallel here, the analogy is NVIDIA. It's export controls both ways, right? The Americans are saying that you can't buy our best chips. The Chinese are saying, well, you can't buy our best engineers.
Yeah.
Da-da-da-da.
There you
Yeah,
go.
yeah. And
Well,
so, yeah.
What else on this? So we've also got the Google Anthropic deal. Did you want to talk about that?
Yeah, I mean, we talked a bit about it last week when it was still at sort of at a 10 billion kind of quantum, and I think right after we had gone to tape the pod, it was then up to 40 bill with 10 bill down now and another 30, subject to some milestones. I just think it's exciting. I think I feel about
You're a
Google a
big
bit
fan.
the way you feel about Apple, and I think they're super smart.
I'm always kind of intrigued when you see pledges that start with up to. So we will invest up to 40 billion. Well, is that 1 million or is that 40 billion? I don't know. Nobody knows. It just feels I'm still always a little bit kind of sniffing around for the bullshit PR of we're going to spend $1 trillion on capex and we're going to invest our 50 billion into this. I wonder what the reality will be. It just feels a little bit nebulous, feels a little bit ethereal, all this kind of numbers being thrown around.
Yeah, I think there's a structural cap on the ownership that the deal is allowing Google to take, which is 15%. I think Anthropic has been very smart in the way they have both Amazon and Google as cloud providers, so they're not locked into either
Nice
one.
hedge.
But obviously there's a very close relationship and collaboration between the two because Anthropic now does a lot of their work on Google TPUs. So they're using the Google stack.
And everyone needs everyone to a degree, right? I mean, Apple still needs Samsung, even though there was a lot of animosity back in the day. I mean, everybody still needs everybody to create a functioning ecosystem.
It's probably a good thing.
Yeah, I think it kind of ties everyone together, and I think in a healthy way. So we need to go into a little bit of what about us-ism. So how does this come back to Europe, and what does this mean for us?
We've just had some phenomenal announcements. I think you teed it up nicely. We've had Ineffable, which is David Silver from DeepMind.
That's
coming
massive.
Out. It's
Oh, my Lord.
massive. $1.1 billion round at plus
In
$5
Europe,
billion
kids,
valuation.
in Europe. This is here. This isn't Valley. It's great.
No, right here in London. He is just a fantastic technologist. I mean, he was the creator of AlphaGo. He was the architect of AlphaZero. I mean, we've watched those documentaries. We've seen and followed what's been happening. Now, his pitch to the world is, we are not going to train another LLM on the corpus of the internet. We're going to have reinforcement learning from scratch. So what does this mean? It's essentially saying the way that AlphaGo was trained, i.e. by teaching it the basic rules and then having it become world champion by playing against itself and learning the rules and figuring things out for itself. That's how we're going to create the next generation of AI. Can it even work? I don't know. It sounds bonkers, right? I mean, how is a model going to figure all that out with all the corpus of the body of world knowledge to train it? But if anybody has got the right to go and figure it out, it seems it's David Silver, and the who is who is in that round.
Yeah, it's great. And Recursive and Amy, I don't know if you have any notes on those guys as well.
Yeah, that's more about AI that approves its own architecture. It's about, once you have AI out in the real world, how can you make sure that it continuously improves and becomes better? We've seen a lot of failures in enterprise deployment, and, we're trying to put AI in and actually make it work. And of course, if you have a static model that can't learn on the fly, well, that's a huge impediment. And so Recursive Superintelligence is making a pitch there. Again, it's a $500 million round.
Love it. Well, but then everything is kind of doubled, tripled, quadrupled in our world. I remember looking at our early notes when we first started the our first fund, and I was looking at helping founders get to their first million. It just sounds so quaint now. It just feels so out of date. But there we go. I also want to pick your brains on some frontier models. It looks like we've had a number of new drops. What's happening on the frontier model base?
Yeah, look, it used to be big news, big announcements when new models were out, and we've seen so many come out now. X, they launched the new version of Grok 4.3 on the 17th of April. You've seen the new Kimi K 2.6, GPT 5.5 came out, and then we had Opus 4.7 come out just before. So it's the densest release window on record. And sort of the cadence itself stopped being the story a couple of quarters ago. Now monetization is, and monetization is really kicking in.
I saw very quickly. I saw a number of buddies now re-loving 5.5.
Yeah,
I don't know if you've had a little play or whatever, but it felt like there was a lot of love for all of the Anthropic products and the direction. And oh my God, this is amazing. Whether it's talking about Mythos or 4.7 or whatever, but it feels like there was a little bit of, oh, okay, they're not out of the race just yet. So this is obviously still interesting stuff, and everyone is still kind of cat and mousing here.
100%. And isn't competition a great thing? I mean, I think, Altman, he has declared, I think he declared a couple of code reds actually over the last 12 months. And
Who hasn't?
Well, there you go. Well, I think that there's no code red at Anthropic. I think they've just been,
just doing the do.
Ahead.
Yeah.
But so that's been interesting. You're seeing the API cost, so the token cost of the new GPT-5 model from OpenAI. It's double the price of their previous model. So
right.
It is. So they're really putting on the screws. Now, Anthropic has been doing something maybe nefarious. I don't know if I'd call it, but they've been quite clever.
I can feel you catching your words. What do we call this? Yeah.
Everybody that I know have been noticing what happened as they rolled out Opus 4.7. It's obviously frightfully smart, and it uses more tokens. And so two things have happened simultaneously. It's more token hungry, and they've also lowered some of the thresholds for when your kind of all-you-can-eat consumption or kind of limits kick in. Right. So people's Anthropic bills are just going through the roof right now. And again, we'll see whether you get some pushback because of that. But of course, it's so good, so we pay and we use it, right, because it creates so much value. But it's just really interesting that they were able to grow at the level they grew without this, and now they're putting on some of the screws around monetization. It's effectively a price increase.
Yeah.
And we should see. I mean, the expectation is they could hit $100 billion in revenue this year.
That's incredible. Yeah. I mean, let's talk a bit more about that later. What else is going on the model front? Anything else?
No, I think that's key. So the Grok 4.3 model, it's still beta only, and he was charging $300 a month for it. There are no benchmarks yet, and we don't have any separate API pricing as far as I know. So Musk is still working it out. Right. We've seen a little bit of movement on Mistral. They have a new model out. You can buy it off their API server at a much, much lower price than Anthropic Sonnet model. And they've shipped their own Vibe agents as well. So Mistral is pushing things through.
Interesting.
I don't see them competing globally yet, but I think for sovereign AI in Europe, there's a massive market for what they do.
Yeah. Because it will at some point become a case of utility versus price, I imagine.
Oh, 100%.
And as you can chop and change, and as it does become more commoditized, and as there is such healthy competition, I wonder where the utility layer will stop and you go, look, this is what we need. And therefore you find that the best price for that, but we'll see. Interesting.
Yeah, but then the value moves up the stack, right? I mean, as we can see, if you have the right harness, and with harness, I mean a thing like Claude Code, the thing that sits on top of the model and really helps you make the most of it, the right harness can 6x the performance.
Yeah.
So we're talking about eking out 10, 20% for every new model release. Well, you can 6x by having the right scaffolding, the right structure around it. That's much, 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 much more. So that's where you move from model to middleware to application.
And my point is more a case about, what does a business need? What does the utility need to do and to function? And at what point will you make a call that this is good enough? We don't need the latest, greatest. And I'm super intrigued as to where open source layers into that.
Yeah,
That's,
but I think you're sort of already given part of the answer there, right? Because I think you're going to be looking at lots of different use cases, and for lots of use cases, you don't need the most fantastic model. I mean, a lot of the stuff we do in business every day is not quantum mechanics. It's not rocket science. It's reconciling invoices. Or,
it just needs to work.
It just needs to work, right? Or processing KYC documents or application forms. There's so much stuff that could be done without the frontier level stuff. So absolutely, that's what's happening.
Let's I've been keeping track of which IPOs are kind of going to happen in 26 and which are going to fall into 27 or perhaps not even happen. But SpaceX looks like it's still going ahead this year. What's the latest with their listing?
So we have we know that the S1 has been filed confidentially, and we're expecting it to go public mid-May. What does that mean? It's effectively the filing that has the data, the information that investors need to look at to figure out whether they want to invest in this IPO or not. And so why is that exciting? Well, it would be the biggest IPO in history, nothing short of that. The target is somewhere in the window of $1.75 to $2 trillion, a raise probably around the $75 billion.
What's UK GDP is what, 3 trillion?
Yeah,
ish.
Yeah,
if you squint.
Yeah,
so this is 2 trillion in one filing, potentially.
It's a massive number, and it's a massive number also when you put it in the context of the revenue the company is doing.
Yeah,
the 2025 revenue was 15 to 16 billion.
But it's Muskian revenue. It's Muskian revenue, so it's okay because he's going to do something in the future that we just don't know. It's going to be magical.
Muskian multiples.
Muskian multiples.
I mean, so look, if it's at 1.75 trillion, you have 110 times trailing revenue and 220 times earnings.
220.
That's, multiples of what NVIDIA or even Tesla are trading at. So there is so much excitement around this. And it is an exciting case. I mean, I look, people that have been betting against Musk before have lost a lot of money. It's hard to justify the valuation on the basis of where the company is today. I mean, it would have to have exceptional growth for many years, right? 4, 5, 6 years to grow into this kind of valuations. You're really paying ahead of where the company is.
But that's what investors do, right? We invest in tomorrow. We don't invest in today. But this is tomorrow's tomorrow. And
exactly. You want to get compensated for that. You want to get compensated for that, right? That's why whenever you make a seed investment, you're not buying in at $1 billion, right? You're trying to buy into something lower in the hope that it'll be worth more in the future. Now, the bull case here is space compute. And we talked about constraints on Earth, and Musk keeps coming back to, look, there's just not enough power. Our intelligence consumption is going to go through the roof. There's just no way we can get the power we need. This year, we're going to run out of power. And so space is the only place we can get the power we need fast enough to tool up on delivering the AI people want.
But my assumption is also it's not just about power, it's about freedom, as in they don't have planning constraints, build constraints, people constraints, regulatory constraints. This is just like we can do what we want in space. Is that fair?
I think there's part of that. And I think that's part of that links back to the power, because one of the problems is the consent to build the power and create the power plants and the distribution.
Yeah, and also, I mean, I've seen a number of American politicians blocking or allowing in states because they're concerned about energy prices for consumers going up and access for consumers. So I get the sensitivity, but it feels like there's just a lot more freedom to him if he does whatever the hell he wants in space. Yep. If it works. Yep. I mean, I am not a physics major. I'm not an energy guru, but it just feels a little bit nuts to do what he's proposing. But like you say,
Dan, it's a massive bet. It's a massive gamble.
Don't bet against Musk, right?
Yeah, it's a massive gamble. I mean, look, he's verticalizing the production of GPUs. He's creating his own vertically integrated production. I think both Tesla and SpaceX are going to manufacture that. Both companies are manufacturing solar panels. Right. So they're effectively, they're trying to find all the different choke points, all the aspects of the value chain here that are needed to make this work.
Yeah.
And I mean, you got to admit what he did with Tesla was incredible. What he did with SpaceX was incredible. So maybe he can pull it off. And if he pulls it off, yes, then this will be in a very attractive company.
Worth the 220 forward revenue?
Yeah, I think so. I mean, if you think about how quickly AI is growing and how quickly it can become, and if you look at a world where, within the next 12 to 15 months, we effectively can't grow the AI inference on Earth anymore because we just can't stand up power quickly enough. We can't get the gas turbines we need, right? And this becomes the only place we can get it from. Well, then yes, that's going to be a very nice toll booth to sit on top of.
Yeah, fair enough. Well, let's change lanes. Let's talk about the EU AI Act and the UK AI plan. It was a relatively big week for both. So 12 hours of trilogue, which is three-way dialogue. If people don't know what that is, I had to look that up. No resolution. So the EU is still arguing, should AI inside a medical device fall under the AI Act or the medical device regulation? And without this omnibus, the original 2nd of August deadline stands, which I know you've got some notes on, Mads. Same day in London, Liz Kendall announces a 500 million sovereign AI fund, a national hardware plan, and a middle powers alliance with France, Germany, Canada, etc., etc. And her line on regulation is pragmatic, not dogmatic, but I'd love to see how that actually comes to pass. So we're very kind of split, running in different directions, although they need to connect because we want to be more buddies with the EU. Is there a win here? If so, for whom? What's the dealio with the EU AI Act and the UK AI plan? Thank goodness I put my teeth in for that one.
Yes. Lots of bureaucracy to talk our way through. I mean, let's just recap what was planned, what was happening, what was meant to happen. As we know, we have the EU AI Act, and industry, businesses, and governments have sort of woken up to figure out, well, actually, maybe this wasn't such a smart thing because it's going to stop the ability of European countries to build AI champions and for our companies to compete in the AI economy. And so an attempt was made to push some of the regulation back, to restructure it, essentially to, you could say, water it down or change it in such a way that it no longer holds companies back in the way it could today. Part of that was also touching GDPR, where there are real issues. And so that's why it's called an omnibus, because it's meant to sort of touch many different parts of regulation and legislation. Earlier this week, there was a big kind of trilogue where you got all the different parties together to discuss, can we change the laws and the rules? And no, was the outcome. Parliament killed it. You have people from different countries sort of saying, oh, this is just big tech overreach, and we're just deregulating and normal people will lose from this. And so actually it didn't happen. Now, it didn't happen this week. I still think that there is a chance for a deal in May or later in the summer.
It feels like there's a lot of, not goodwill, it's the wrong turn of phrase, but it feels like there is a lot of energy push towards making this happen.
Yeah, because look, it's back to the good old virtue signaling days from when there was a feeling that, look, in Europe, we are rich and we have successful companies and rich economies and we can afford all this. We can afford to have all these rules and all these restrictions. And it's just like, if we kill our industry, there's no tax revenue. If there's no tax revenue, we can't afford any of the
There's no good stuff.
There's none of the good stuff. So we sort of, we absolutely must enable companies to compete. And you ask, is there a win here and for whom? And it hurts me a little bit to say, but I actually think probably the biggest winner from this could be the UK, because it just makes, I think London is already the most attractive place to build these companies, but it just makes it the only place in Europe where you can build these companies.
And we're landing more and more of the big teams, aren't we? There are more and more
100%.
people opening in London,
90% of all global AI companies starting a second lab somewhere pick London as the number 2 spot. Okay, so it's US companies coming, it's companies from elsewhere in the world. London becomes that gateway station. Anthropic is investing, everybody's investing here. And you've seen, Ineffable and Recursive and others. So that's exciting for us. I just think it's not enough. I think if we're just an offshore economy that's profiting off the stupidity of others, I think that's not enough for us as a continent. I think it'd be better if we could sort of all fix this together.
But it's better. I mean, it's a fine line to tread, isn't it? How do we stay aligned with the EU, our biggest trading partner, just over the water, and not upset the apple cart too much, but also create the UK as this space for innovation, which I think is probably one of our one of our biggest leading points, our moat, if you like, is all of the smart people that we have here, which is obviously people are using more and more people are coming, which I think is great.
Yeah. No, it's a fine balancing act. And obviously the government is trying to tread the needle here.
Tread the wire. A last random one I wanted to talk to you about was, I want to talk about energy. Obviously, energy we speak about all the time. We have what is, I think, the most expensive energy in the world, although I'll break that down in a second. But I wanted to talk about small modular reactors specifically, because in my naive head, they are easily transportable. We can throw some into a shipping container and basically plug new energy sources into the grid in a relatively quick and timely manner. And I don't know, I'm not an energy guy, but I'm trying to keep my finger on the pulse of what's available, how it comes to pass, what we need, where we need it, and when. So small modular reactors is my kind of direction of travel for this piece. But just some backdrops, just so that people kind of know where I'm coming from. So there are 3 layers of energy provision. We've got household consumer, which is a consumer is effectively SMEs, offices, and the high street. And then on top of that, industrial. I didn't realize there was 3. I thought there was only 2. So the industrial is obviously the manufacturing and the super high scale, high voltage stuff. For households, the domestic side, the UK is second behind Germany, who's the most expensive. For commercial, we are top quartile across Europe. We are not the most expensive for commercial. But here's the biggie. For industrial, so that's the heavy stuff, we're around 63% above IEA median and about 125% above the EU14 median. So we are crazy expensive for the industrial stuff. So back to SMRs, do they have a place here? I don't know if you have an opinion on this. And the other thing, as I was looking and researching about energy, that I was thinking was maybe in our world, and not to just talk our own book, but on the software side and on the application side, maybe we don't need as much energy, ignoring the pricing for a second, but will we be able to do more with less with clever tech and not need as much energy as perhaps we think or fear? So that was all in my noodle this week as I was researching about energy. Kind of started with SMRs, but a lot of word salad to unpack there. Sorry about that. But what do you think, and where would you go?
Let me pick up on just where you sort of closed off, which is, do we need all the energy? I think the history of kind of modern human civilization is the ability to turn energy into wealth and prosperity. That's how these things work. Like the more energy we produce and can consume, the more prosperous our societies are. Up until the last 20 years, when we suddenly started to see a sort of a disconnect in the Western world. And I think we were applauding ourselves and saying, oh gosh, look, we were able to grow GDP with lower emissions, we're able to become more energy efficient. And I think it's probably people maybe willfully just not looking that closely at the fine print, because so much of it was down to, well, we're moving all the manufacturing of all the stuff somewhere else in the world. And
all our emissions, all our manufacturing, all the hard stuff, all the dirty stuff, let's shove it over there.
Yeah. So although we were the ones consuming the products, kind of somebody else was using the energy and we could sort of blissfully forget about it. And it's kind of led us up in all this mess we're in now. We absolutely need energy. We need a lot more energy than we have today. And I think we've had not much of an energy policy for several decades. And it seems like people are waking up now to the fact that we do need to invest and we need to find ways to make sure we can create the energy consumers, businesses, the AI industry, and everybody need. Now, SMRs are super interesting. I think it's an all of the above. We got to explore all these different strategies. There won't be any SMR-powered electrons, most likely, in data centers until early to mid-30s.
Right.
Okay, so this is years
Everything's
away.
always 10 years in our world, isn't it? It's always 10 years off. Yeah, okay.
This is years away. So I think it's great. I think we should do it. If you look at why France is as successful as they are today on an energy front, it's because of decisions they made in the 70s and 80s. So we can't just go from crisis to crisis. We've got to have a longer-term strategy, and I think that's smart. But it's not enough. And I think we also need to do things that can help right now. And those are things like gas peakers, right? The ability to create more energy short-term using gas. It's life extension on existing nuclear plants. We've got Hartlepool, we've got Heysham, and yes, they are older. And yes, there is an engineering case for winding them down, but maybe we could extend their life for a couple of years while we get some of these newer reactors and newer things on board. And then there's just great acceleration in general. There are so many zombie projects right now that are that have filled up the queue, and we need to find ways to process that more quickly. So lots of things. It's not SMR or something else. I think it's both.
I'm going to keep an eye on. I know that, actually in France they're doing some incredible work on these modular SMRs, and maybe I'll bring that back to the table and try and convince us that there's something to do with them. But my prediction.
Just before we go there, I think the interesting thing is that energy isn't the only thing to fix. I think you were sharing on our channel kind of an article from the FT about how a lot of US data centers are slipping, and it's not just because of energy. It's also because of kind of mundane things like electricians and pipe fitters and
the real world stuff.
It's kind of and so you can say that's a problem. But the flip side of it is, but wait a second. Is that not what we want? We want there to be economic activity. This is economic activity. This is us saying we need more of these great people and more of these great things, so we can build more of the stuff that will make the economy wealthier and more affluent. And so I actually think that I think we need to address this. We need to make sure we have the right apprenticeship programs. We need to make sure we do the things that are needed so we can get the skills into those sectors so we can build. But I think it's glass half full. I think it's a good thing.
Yeah, no, it is. I mean, we spoke about it before. There's supply. There's the restrictions. There's obviously we've got the exchange control sitting on top. If you're doing anything super cross border, there's now obviously the actual provision of physical labor to build data centers. Then there's the grid challenges. There's a whole world of elemental parts to unpack. But we have to get there. So come on, UK, let's do it. Now, my prediction, but let's move into the prediction section, because my prediction is about energy. And I was looking at France and how much energy they produce from nuclear. And I've got a theory. So my prediction this week is that France is going to become Europe's OPEC. And what I mean by that, as in at the moment, it's pricing its energy surplus because it produces a ton of extra energy that it doesn't need and it exports to other countries, but they sell it as a marginal cost. And I think that my prediction is they're going to start selling at strategic value and start using that price point to create some political clout. For context, France supplies roughly 1 in 12 electrons consumed across the UK, Germany, Italy, Belgium, Switzerland, and Spain combined. Net exports hit 92 terawatt hours last year, which is the highest ever. But it's not the generation that's the problem. It's the transportation, like getting across the Pyrenees or wherever it needs to go, which is slowly being resolved, but it takes time to build that kind of infrastructure. 8% of UK energy consumption 8% of UK of our consumption here is from France, and I didn't know that. So obviously we should have stayed nuclear. We should have continued nuclear. What a rookie error that was. Mads, what's your prediction this week?
I mean, just picking up on yours to begin with, I think the difference between oil and energy is it's much harder to store the energy. And I think it's, you don't sell the oil, you can put it in a big tank somewhere. I mean, kind of with the energy, you need batteries. That's really expensive. I think they'll struggle to act the way OPEC is. Now, we're talking about OPEC as an organization that looks like it's falling apart now.
Yeah.
So look,
UAE
maybe you're right. I don't know. Well, let's say the other I don't know if I'd call it a prediction. We have been talking about the IPO market. I think SpaceX going public is super exciting. Another company that must go public is Anthropic. It's the most exciting company in the most exciting space, and it should be a public company, and people should be able to buy into that business and should have transparency into what's happening. And I think that's really, really important systemically and for the world. But what we've also seen is that there is so much appetite to throw capital at them. Right now, they're talking about a $50 billion round at kind of OpenAI prices. There will be a board decision in May.
Well, soon there'll be Anthropic prices. Soon they'll be the market setter.
Well, there you go. And we would have said, I think we talked a few months ago about whether there's enough capital in private markets to keep fueling all the capital these AI labs need. I'll tell you, we've been talking about Anthropic for years, and people were passing at 10, and we're passing at 50, we're passing at 100, and we're passing at 350. Half of all the family offices I talk to now are putting capital into this round.
Yeah.
They are, everybody wants to be in this business now because they feel they missed out. And so they just have so much money thrown at them. And so my worry is that because it's so easy for them to raise privately, they might be tempted not to go public, which I think is a shame.
There you go. You've come my way. That was my prediction last week. They'll stay private.
Yeah. I think it's a shame, but
yeah. Well, let's move on to deal of the week. What's yours?
Well, we talked about Ineffable and David Silva a bit earlier, and I think what more to say? Kind of the who's who is backing it. There's some American capital coming in, so Sequoia and Lightspeed are backing it, but also with Index and EQT and
the proper
others.
who's who. They're all in there. Everyone.
Yeah.
Who's not?
Yeah. And so I think it's a great thing, and long may it prosper.
Yeah, good for them. Mine is a lot smaller. Mine is a tiny startup, ATech, and they are effectively they've raised some money. They raised 680K from Loveball, and they're helping make hardware prototyping more accessible. So I thought they were a very, very cute little startup, not in the billions, in the hundreds of thousands, but good speed to you, my dear gentleman. That is it, I think. Anything in your diary? I'm off to Switzerland this week. I'm off climbing Mont Blanc, do some ice climbing, weirdly and wonderfully. I'm a bit scared. What's happening for you this week?
I'm not traveling.
What? You are the traveling Wilbury. Okay. Well, thank you so much for your time, my good man. Love our chats.
Pleasure as always.
Everybody else, we'll catch you next week.
See you on the next one. Bye.